Hey, Robert, what are you doing?
Going home.
Okay, this is Jim Freeman with the JP Freeman team. Actually, it's not me, it's Robert Nerby and his mother Cherie, standing in front of Robert's fireplace in his newly acquired home. We're here in McCormick Woods at the Ridge. And Robert, why don't you tell us a little bit about who you are?
So, named Robert Nermy. I grew up in the Gig Harbor area, so I'm not too far from home here. But lived here all my life, was away for college, and then got a job at a company called DaVita Inc. In 2020 when I graduated. I worked there a few years as a treasury analyst. And then about a year ago, I moved over to a company called Ernst & Young. And I work in their treasury consulting practice there, working with big corporations on different, financial software implementations or different corporate finance related activities.
So you know a little bit about numbers.
A little bit.
Okay.
Sure.
And what about your mother here, Cherie? Introduce yourself, please.
So Cherie Nerby, and I'm with American Pacific Mortgage. And been in the lending arena with the mortgage side of things for many years, and just a passion that I have for helping people become homeowners, build generational wealth for themselves through homeownership and manage their mortgages, investments, homeownership as owner occupied, and I really just believe in being a homeowner and helping that American dream.
True enough, and you've been doing this, as you say, for a number of years. I won't say how many, but you've held supervisory roles and I guess frontline consumer roles, helping people get loans to buy homes.
Definitely, and it's a passion that I have. So lots of experience and background, and I kind of look at it as a puzzle, and I have clients come to me with their needs and help them fulfill that dream.
Cool.
Short-term goals, long-term goals.
All right. Well, this is a kind of different. Number one, this is your son, right?
It is.
Yeah. So you were able to help your son get into a special form of home acquisition and mortgage financing that's available to a lot of people, but they don't really know about it. But first, let's just take a quick roll around. This is a nice home. It was built in, 2006, Robert?
2007.
2011. So it's a fairly new home. It's got like all homes, and all homes have been lived in before, it has a few things that need to be worked on. But we looked, when we discovered this special process, which the special process is about assumable loans, low rate assumable loans, that you had engaged with your mother for probably several months prior to even starting to look, didn't you?
Yeah, he actually had started looking like 3 years ago, maybe.
Wow.
And as
After
rates
were good.
Yeah.
When rates were good, I started looking, and then slowly.
Yeah, did you, maybe he wasn't quite ready then, he didn't feel ready, and then as rates started to creep up, it's like, I'm never going to be a homeowner with the way things are going today. And so it was really looking for opportunities to make that happen.
How did you learn about low rate assumptions?
I think it was you that first mentioned them to me, and then you're like, oh, I have a friend, real estate agent, Jim, and he can put together a search for you, and that's kind of how I guess started looking at all the properties in the area. And then she was also doing some digging on the back end too, looking at, because a lot of times, listing agents don't know that their properties are assumable as well, so they may not have it in the listing, but if it's like an FHA loan or a VA loan, then it is an assumable mortgage. So they had your list that you had going for us, and then her digging on the back end as well.
So you'd been looking for 3 years.
Yeah.
You had been employed as a financial professional during that time, earning a pretty good salary. You were saving money, and probably somewhat due to the influence of your mother, you had really worked on your credit.
Yep, definitely. Since,
Yeah.
since 18, just get a credit card, pay it off, in full every month and whatnot. So building that up for years and years, definitely.
Okay, cool.
Yeah, I can remember him in college actually advocating for his friends to say, you need to start building your credit. So it's pretty.
And saving money.
Yeah.
Right. This home, so you searched for years, rates went up, your opportunities you felt were diminishing to be able to afford, because at the same time interest rates were going up, home prices were going up, weren't they? Yeah. So you had a double whammy. You had to pay more for homes that you wanted, right. and you also had to pay more per month because of interest rates. All right, so
trying to save harder.
Yeah, tough situation. But when I met you, Robert, we spent, I don't know, 4 or 5 months, I suppose, looking at homes. And what happened? We actually made offers on a few homes, didn't we?
We did, yeah. I think it was three, at least like 3 or 4 homes that we made offers on.
Right.
And then I think, yeah, this one worked out. But
Well, in our experience was that some sellers, because they were VA, didn't want to sell to somebody who was not VA. And so that didn't work out so well. One seller that we encountered and their broker didn't really know that their FHA loan was assumable, and they were a little bit suspicious of our offer. So we had to kind of work through, but it ultimately
research.
Yeah.
Yes, it works.
Yeah. But somebody else, there were multiple offers on that property. Somebody else made an offer borrowing money at higher rates. I don't know why they do that, but they did. So we lost that one. But after 3 or 4 tries, we got this one, and we were able to enter into contract. And what was the interest rate that you were able to assume on this home? 2.875% at a time when, Cherie, what were loans being originated at for new mortgages during that time?
In the mid-7s.
In the mid-7s. So you were able to borrow money at less than half of the going rate. So what were some of the benefits of doing that?
So the amount of principal and interest each month, like the amount going to principal and the amount going to interest is almost the same, and it's in the 3rd year of the loan right now since I assumed it. So within the next year or so, it'll be more going to principal than going to interest on the monthly payment. And so, I mean, if I were to originate a new loan at this time and have the same house, same purchase price and whatever, my monthly payment would be over $1,000, $1,500 higher each month. And that's just money going to interest every month. So basically just throwing it away.
All right. So just to be clear about that, when you started making your payments, which is going to be next month, the portion of your payment going to principal is higher than it would have if you had to originate a new loan. The total payment, the principal and interest, is lower because the interest rate is lower. And the remaining term on the loan is approximately 27 years versus 30 years. So you're only going to have to pay that loan for 27 years if you just made the minimum payment every month. And that's going to save you 3 years worth of total payments. So how much did you calculate as a financial professional that was going to save you, roughly? $380,000 over the term of the loan, which is about the amount that you could buy another home with, right? Right. So yeah. So there's a big financial advantage. I know about this. Your mother knows about this because she and I have worked as a team for other buyers to do the same thing. And in one case, because the purchase price of the home was higher than yours, and the rate differential and the remaining term differential, that individual was able to, that was Sean, by the way, was going to be able to save maybe $1 million, over the term of his purchase. So can we all agree that that's a good financial advantage?
It's
okay.
Awesome.
Yeah. And so right. And so why would anybody not do that?
They don't know about it is one of the
about it?
reasons. They don't have money saved yet. So sometimes, you need money to do this kind of adventure. And it just, it's getting the word out there to let people know that this is an opportunity. Talk to the right people, help educate yourself, see people doing it,
Right.
have testimonials that this is definitely in this market. It's an advantage and a way to make things work for people.
Right. Oh, so that's what we're doing right now. We're helping people understand. For those of you who are watching this video, we're going to help you understand this. But as much as it is a financial advantage for you as a buyer to do that, it's an equal and opposite disadvantage for the lender to allow loans to be assumed. So, Cherie, why can people assume loans? What causes that?
The roadblock to assuming a loan?
Well, what type of loans are assumable?
Government loans are assumable. So VA loans, FHA loans, USDA, typically, all the government loans are. That's a feature that's been in place for years. When
Decades.
When I first purchased, my husband and I, back in '88, we assumed that person's loan.
All right, so Cherie, what kind of loans are assumable? What should people look for if they want to try to assume a loan?
So a lot of times they're listed as assumable, and those are the government type of loans. So FHA, VA, USDA. There are a very limited amount of conventional loans that are assumable. You usually don't see those. Usually the typical are the government type of loans.
Right. So government type of loans are VA, FHA, and USDA rural development loans.
Correct.
Now here's a fun fact. I'm just going to say it because, well, you know this, but from 2009 to 2022, a span of 13 years, all loans that were originated during that time were originated at note rates below 5%. And so today, when you're talking about 7.5%, 8%, 5% can look pretty good, can't it?
Definitely.
Yeah.
I mean, it's phenomenal. As Robert mentioned earlier, saving him, like $1,200 a month in a monthly payment.
And
Not to mention the thousands of dollars in interest.
Correct. And so you told me at one time, I think, Cherie, that during that period of time, or today, something like 65% of all loans originated are still active. So 65% of loans originated from 2009 to 2022 are still available.
Right. We're actually seeing more of the older originated loans being listed for sale as assumable too, just because of that selling feature.
Mm-hmm.
What's happening though with the ones that were originated more years ago is that gap from the purchase price to what the assumed balance is. Right. Becomes greater, so more cash is needed for those type of loans.
All right, and we mentioned before, so a buyer needs to have some cash, sometimes not a lot, but sometimes a lot. And we've helped people with as little as $45,000 do one of these. We've helped people also who had to put down $150,000.
Right.
And it just depends on the situation, really.
There are some tools out there too. If you're assuming a loan, you have some money down and maybe you need a little bit more to actually look at a second mortgage as an option behind that assumed loan too, to kind of purchase together.
But that is available, and it means you don't get all of your money at those low rates, but you're going to get a blended rate, which is much superior to the origination rate today.
Correct.
So we mentioned before that lenders don't volunteer to do this. They do it because if they want to continue making government loans, VA, FHA, USDA, that HUD and VA tells them that they have to make these loans assumable, correct?
Correct. It's a feature of the loan that as a servicer, they have to comply with that feature that says somebody can purchase and assume that loan.
Right. So we went through this with both sellers and listing brokers. Some sellers didn't know that these were even possible. They didn't believe us. But when we finally got into contract, it still wasn't all that easy, was it?
No.
So what happened, Robert?
So we went under contract, and then, I mean, you got to go through, I mean, the process of assuming the loan, I'm sure it's different with every servicing lender, but, this one is, I guess, compared to your other experiences that I've heard about, this one was a little bit more straightforward. But just a lot of paperwork. I don't know. But a lot to go through. Obviously, your typical, like, verify your ability to pay back the loan. But with this being a VA loan, there was a lot of other just different little nuances in there. Some of them applicable, some of them not applicable, since I wasn't a veteran. But just a lot of, like, sifting through territory that not a lot of people are familiar with. Even the servicing lender that we were working with on this one had a specific assumption department, so that helped streamline things a little bit, I think. But definitely just a lot of confusion at different points, because I feel like a lot of people don't have a lot of experience with these assumptions.
Well, the fact is that, when you're originating a new loan, like with your mother, for instance, she would be the expert to guide you through the process. She would gather all your paperwork together, help you put it in proper order, make sure it gets to the right places. And that's really important for any loan. But in the case of an assumption, you don't typically have a person like that. You have to do it yourself, and sometimes the lenders won't even allow you to have other professionals, be involved in the conversation. That wasn't the case here. They did allow this. But how important was it to have your mother, but as I'll say a decades experienced lending officer help you through that process?
Yeah, it was invaluable. I mean, like, through every step of the process, felt like we were ahead of the game, and I mean, she knew more than the people at the company that we were working with. So I mean, she was always one step ahead of them, and definitely just kept things moving along. She helped the seller through the process as well on their end. So it was a team effort to get everyone through it as quickly as possible.
Yeah, we eventually got the sellers full cooperation, and they did pretty well, I think.
Yeah, they definitely, the teamwork and communication helped speed things along, and the success, both everybody motivated for the same cause.
Yeah, so Cherie, you and I have helped other buyers, as we said, and it took a while. Sometimes it took up to almost 90 days from the time that people entered into agreement to get it closed. But in this case, how long did it take?
I think it was just almost 30 days. I mean,
I think it was under 45.
Definitely under 45, and from start to finish, when the contract was, after it was negotiated and accepted and the loan application put in right away.
So the key ingredients here were all the parties knew that the loan was assumable, that we were able to get the cooperation of the seller who needed to submit some documents and communicate with their lender initially. We had excellent advice from you, Cherie, as to what the process would be. And in this case, the servicing lender allowed us to communicate along with Robert when they were making requests, and there's an exchange of information. Mm-hmm. And that's what made it work. So that process there, Robert, was worth hundreds of thousands of dollars to you.
Definitely, indeed, it was. Yes.
Right. So is it now that you've done it, now that you're here, would you say that it's worth it?
Yeah, I definitely think so. I mean, like, it was kind of hard to wrap my brain around, I guess, in the beginning. But, like, when she started, putting those comparisons next to each other of, like, oh, here's a 2.875% rate and here's a 7.5% rate. I mean, I understand, numbers relatively well, but, like, even just, like, sitting down and looking at that, it had me more confident. I guess the main concern of me going into that, like, I talked about it with you as well, but it's like, oh, what if the values crash? And you're like, okay, but you still have a low payment. So it's,
so just live there.
Yeah. But you could have a really high payment and then, the value crashes. So it's, it's definitely worth it in my opinion. So.
Okay, well, great. I wanted to say thanks, Robert, for working with me, and I always enjoy working with your mother. We've been a good team for decades now. So, if any of you out there watching this video are interested in learning more about the process of assuming low rate loans, or even purchasing loans with zero down, we have down payment assistance. In some cases, we can originate new loans at lower rates than are available because of things like buy downs, or sellers may be motivated to help you get a lower rate for your home, which you can also do, right, Cherie?
Definitely. And I think that people just, you want to seek the advice of somebody that's going to listen to what you have to say, hear your dreams, hear your goals. And like I said, it's kind of a puzzle. I love it. How do you put things together, knowing what somebody wants to accomplish? And there's options out there. People that didn't think that they could purchase, the younger generation, helping make that happen, and then just all of the resources that are available. And there's tools out there, temporary buy downs, down payment assistance, lots of things that are out there. You just gotta hear what those are.
Yeah, you gotta learn about it, and you might as well listen to somebody who's done it tens of thousands of times. That's a fair statement. Does it cost anything for people to talk to you?
Not at all.
Not at all.
I welcome those phone calls just to see how we can make that work for people.
And are you a scary person? Are you hard to talk to?
Am I scary?
Okay, Robert, her son says she's not scary. So we can believe that.
Credibility of the speaker here.
All right. Well, thanks to both of you. I really appreciate the opportunity to help your son, Cherie, help Robert get into his first home. By the way, it's his first home. So,
Pull up a chair and sit on the floor.
Yeah, we don't have any chairs. That's why we're standing up. But
we're working on it. Come on.
Yeah,
it's timing.
If you have any questions, or you want to learn about how to buy homes with interest rates below 5%, in Robert's case below 3%, just give us a call.
Yeah, thanks for listening.
Talk soon. Hope to talk to you.
Talk soon.